Sensex and Nifty gain for a second straight session. Metals outshine other indices. FMCG and pharma pulling headline indices lower. Meanwhile, the rupee inching closer to a record low against the dollar. World Bank slashes India's GDP growth forecast to 6.5% for FY23. The bank warned that spillovers from the Russia-Ukraine war and global monetary tightening will weigh on economic outlook. OPEC's decision to cut crude oil production and trigger an oil price hike, a big worry for Europe. Analysts see India being pushed further into buying discounted Russian oil. Impact unlikely on petrol and diesel prices. Akasa Air to begin international operations from the second half of next year, on path to rapid expansion with a new aircraft being added to the fleet every 15 days. Says the late Rakesh Jhunjhunwala left them flush with funds. Airtel launches its 5G Plus services in 8 cities, promises massive speed, best voice experience, clarifies that subscribers do not need to change their SIM cards to avail of the new service. Government orders probe into Sonipat-based Maiden Pharma after allegations by the World Health Organization that cough syrups made by the company killed 66 children in Africa. Samples to be sent to the Central Drug Laboratory. Markets gained for a second straight day, but profit booking towards the fag end of the session trimmed gains. Sensex up over 150 points, shutting shop above 58,200. Nifty up 57 points, ending above 17,300. Metals gleamed in trade today. JSW Steel, Hindalco, Tata Steel, some of the top Nifty gainers. Other blue chips included Coal India and L&T on the upside. On the other hand, Bharti Airtel, HUL, HDFC, IndusInd Bank, Divi's Labs, some of the top laggards in today's session. With fears of recession looming large, all eyes are on the Indian IT giants who will come out with their quarterly numbers next week. Despite all the talks of slowdown in demand from the US and European countries, analysts expect IT companies to deliver a resilient quarterly performance. My colleague Sakshi Batra joins in with more details.
Well, all eyes will be on the IT sector come Monday as the earnings season for the July to September quarter will kickstart with IT heavyweights reporting their numbers. Now, the IT sector is expected to post resilient Q2 performance, and that's despite all the talks of slowdown in demand from the US and the European countries as well. Infosys, the second largest domestic IT firm by revenues, could actually lead the revenue growth this time and may announce a buyback along with its September quarter results. Also, as per HDFC Securities, the Tier 1 IT companies are expected to deliver sequential growth in the range of 2.4% to 4% on a constant currency basis. It also expects mid-tier companies to continue their outperformance over the laggard peers, with Tata Elxsi, Mindtree, Persistent Systems, all of them expected to lead at above mid-single digit quarter-on-quarter growth this time. Now, in terms of the bottom line, Nirmal Bang sees a sequential growth of 7 to 12% for all the major IT companies. For margins, ICICI Direct sees a margin expansion to begin in the range of 20 to 50 basis points Q-on-Q for the top 4 companies. Now, TCS, the largest IT firm, is expected to report the highest margin expansion among the Tier 1 majors. Now, among the key things that you should watch out for as investors this time, there will be demand and growth commentary also to look out for, the outlook on the impact of macros on the tech spending of some of the biggest clients, because any negativity there may actually further dent the share prices of these companies which are already under pressure. Remember, commentary on the deal win momentum, the supply side annual guidance on the revenue and the margins will also be key to be watched out for. Also, the hiring and the attrition trends will be key, especially in the backdrop of issues like moonlighting and the delay in onboarding of the freshers by some of these companies. Now, some reports also suggest that hiring for major IT companies may slow down in FY24. So any indications or early indications of that will be important to watch. Now, remember that IT stocks have not really performed well on the street this year. September was the third successive quarter of underperformance for the Nifty IT index vis-a-vis the Nifty index. Now, the question is, will the upcoming results really reboot these stocks again for a buffer-free move on the upside?
Well, just a few days before we find out. Thanks for that, Sakshi. International crude oil prices have started rising once again after OPEC Plus, the Organization of Oil-Producing Nations, decided to cut production from next month. Oil prices, which fell to 9-month lows in the last week, are up $7 to $93 in just 7 days. While the higher prices will not hit Indian consumers immediately, they may have a diplomatic fallout and push India to buy more discounted crude oil from Russia.
On the international diplomatic stage, India has seemingly softened its pro-Russia stance on the Ukraine war, with Prime Minister Narendra Modi telling President Vladimir Putin that it was not an era of war. But this has not stopped India from increasing its reliance on Russian crude for its domestic needs. India's import of Russian crude zoomed in September, rising 18.5% from August to 879,000 barrels per day. Russia is now the second largest crude supplier for India after Saudi Arabia. The share of Russian crude in India's total oil imports has shot up from 1% before the Ukraine war to 21% currently. In contrast, the share of US crude has plunged to just 4% from earlier 10%. According to sources, Russia has been pricing its crude exports to India anywhere between $16 to $30 a barrel cheaper than other countries. With OPEC Plus triggering an increase in crude prices with its proposed production cut, India is likely to increase its dependence on Russian oil, despite international sanctions. External Affairs Minister S. Jaishankar has repeatedly defended this trade deal.
It is a situation today where every country will try naturally to get the best deal possible for its citizens, will try to cushion the impact of these high energy prices. And that is exactly what we are doing. Now, we are not doing it in a defensive way. I mean, we have been very open and very honest about our interest. You know, I have a country which has a per capita income of $2,000. These are not people who can afford higher energy prices.
There likely will be no impact on the prices of petrol and diesel at fuel pumps, though there could be some pass-through for CNG and aviation fuel prices. Most of the additional burden will probably be absorbed by the oil marketing companies. OPEC's decision, meanwhile, to cut production comes in the face of fears of a recession and weak demand. Oil prices were at a 9-month low in September after touching highs of $128 in June.
We are not endangering the energy markets. We are providing security, stability to the energy markets.
At a price.
Everything has a price. Energy security has a price as well.
Despite OPEC's assurances that it is not endangering energy markets by triggering a crude price rise, Brent crude prices have risen nearly $7 in just a week. There's also apprehension, especially in Europe, that the production cut will aggravate energy prices and the overall inflation in coming winter months. Bureau Report, Business Today TV.
The 1,200 crore rupee rights issue of Suzlon opens this Tuesday. The promoters affirmed their intention to go ahead with the issue despite the demise of the company's founding chairman, Tulsi Tanti. My colleague Rahul Oberoi spoke to Suzlon's CEO, IC Mangal, about the rights issue and the company's debt situation and their intentions going forward. Listen in.
All our hard work of last 30 years into renewable energy space actually, and now it is showing the results and the fruits on the surface actually, because in last 30 years, Suzlon has really explained the concept that what is a renewable energy actually, how it is generated, how the windmills are operated, how people can invest actually, and how this can become a win-win solution for the government, for the policy makers and for the investors actually. And now we are seeing that as a country we are talking about 500 gigawatt of the renewable energy over next 5 to 7 years and next 10 years, next 20 years. So globally now, like whatever hard work was required to be done by Suzlon, it has been done actually. Now the fruits are coming on the surface. So my message to the shareholders is that they have really kept their faith and trust in this company, in the promoters, in the management group of this company, and now the right time is just about to come actually. All the worst, all the challenges, whatever we had, it is behind us actually. And now with a very clear vision of our Honorable Prime Minister to have 500 gigawatt of the renewable energy by 2030, it opens up a very huge opportunity. And you see all the generating companies, all the distribution companies, all the power consumers, once you go and talk to them actually, with a very clear intent to achieve net zero by 2070 at global level, at India level also. So I see now from here everything is very clear, very transparent actually, and so I see very bright future of this company.
Okay. And the most important, company has managed to reduce its debt from rupees 17,000 in FY15 to less than 5,000 at present. So what are the future plans related to debt?
Yeah, so we had, as I said, that due to certain acquisitions way back in the year 2007, 8, 9, the debt was taken that point of time actually, and suddenly because of the financial crisis globally, we were not able to utilize all those acquisitions to the full potential, and as a result the debt piled up actually. But with a strong commitment of the promoters to all the lenders, from time to time we took the right decision. Whatever acquisitions we had made, the RE Power or the Henson and the other companies, we sold them back actually, and whatever money we received from that, it has been paid back to the lenders actually. That is how we have reduced the debt from 17,000 crores to the current level of around 3,500 crores. And with this right issue, whatever we are going to collect the equity around 1,200 crore rupees.
Now let's take a look at what else is making news in the corporate world. Shares of SpiceJet surged over 8% after reports suggested that the airline carrier is expected to receive an additional 1,000 crore loan. This under the government's modified emergency credit line guarantee scheme. Bharat Forge was buoyant in trade today, rallying nearly 8%. This comes on the heels of preliminary Class 8 truck orders in North America, reaching a record high on a monthly basis. Shares of Zee Entertainment rallied about 5% in trade after the Competition Commission of India approved its proposed merger with Sony. Now the next pit stop for the company will be to seek shareholder approval, with the meeting scheduled on October 14. Ola is all set to launch a cheaper variant of its S1 electric scooter. Sources have told Business Today that the surprise will include a new variant of the S1 e-scooter priced at 80,000 rupees. The Central Drug Standard Control Organization, CDSCO, has launched a probe into allegations that cough syrups made in India caused the death of 66 children in the African nation of Gambia. Health officials today converged at the Sonipat-based plant of Maiden Pharma, which is reported to have manufactured the 4 syrups, which are on the WHO radar. An India Today group team managed to trace the company's compound but were not allowed in by health officials. The syrups were made by the company under license from the state drug controller and exported only to Gambia. According to a WHO release, out of the 23 samples tested, 4 contained diethylene glycol, a contaminant.
केंद्र सरकार के हेल्थ सेक्रेटरी और फार्मास्यूटिकल सेक्रेटरी ने आज प्रातः ही हमारे जो हेल्थ सेक्रेटरी हैं उससे बात की है, और ये निर्णय तय हुआ है कि पहले कोई कार्रवाई करने से पहले इसके हम सैंपल चेक करवा दें। तो इसके सैंपल लेके जो सेंट्रल ड्रग लेबोरेटरी है कैलकाटा में, वहां पर सैंपल भेजे गए हैं। वहां से रिपोर्ट आने के बाद अगर कोई चीज गलत हुई तो बहुत सख्त कार्रवाई करी जाएगी।
Let's take a very quick break. On that note, back in just a moment.
On 28 September 2022, Popular Front India was banned by India. The PFI has joined the list of organizations that were banned by India. As per the government, PFI has the potential to disturb public peace and communal harmony of the country and support militancy within the country. In this video, we'll tell you about the other organizations that are banned by the Indian government. Organizations like Khalistan Zindabad Force, Khalistan Commando Force, International Sikh Youth Federation are banned in India. But it isn't just that India banned ISYF. It is banned in Japan, Australia, Canada, the European Union and the United States as well. The ISYF organization wants to create Khalistan, an autonomous country for Sikhs. The Government of India banned the United Liberation Front of Assam. It was banned in 1990 due to its separatist activities. Many reports show that politicians, bureaucrats and businessmen were extorted to raise money. ULFA or ULFA is involved in drug trafficking and other organized criminal activities. The Hyderabad-based Islamic religious group believes that the founding principles of Islam and Ligayatism are similar. After having been charged with carrying out a string of bombings in Andhra Pradesh and Karnataka in 2000, the group, however, denied any involvement in the incidents and asserted that it was a section that practiced and preached Islam in order to bring together Indians of all faiths. In 1992, the CBI MLPW was outlawed in Andhra Pradesh. After that, Maharashtra, Madhya Pradesh and Orissa states were asked to outlaw the party by the central government's Home Ministry. At the national level, however, the party was still allowed to exist. The party had many activists mainly in Andhra Pradesh, Orissa, Jharkhand, Bihar and West Bengal. In 2004, CBI MLPW and all its front organizations were banned as a terrorist organization. These are the organizations that were banned by the Indian government due to their illegal practices.
Welcome back. Akasa Air, the latest budget airline in the Indian skies, is all set to fly overseas from next year. The airline, promoted by the late Rakesh Jhunjhunwala, is on a big expansion spree, adding an aircraft to its fleet every fortnight. So how have Akasa Air's first 60 days been? What are the learnings from the highly uncertain sector? I had an exclusive conversation with the top management of the airline earlier today. Here's an excerpt. With regards to Cafe Akasa, this has been a really good festive period, a lot of sales that you've seen. Diwali is also coming up. You alluded to the unique menu. Talk to us a little bit about that and what one can expect if one's going to be traveling Akasa.
Yeah, I love to talk about Cafe Akasa.
Going to make all our mouths water now.
Yeah, that's true. Yeah,
and it's lunchtime too.
It's lunchtime as well. Yeah, yeah. So Cafe Akasa is, I think, a very distinct, menu on board. It's just not the festival menu that we're doing, but I think the way our teams have curated, working with some of the best chefs out in the industry to create a lot of industry first. I was reading a blog, one of the passengers who flown twice, and both ways he said the best thing that he did was have hot chocolate on a flight, right? And you can imagine, and there's pasta, there's Vietnamese rolls, which are industry first. We will refresh our menu. It's not just one-off. On almost every 3 or 4 months, we'll have new menu that we're curating. We focus on health as well. So people, customers who are conscious of health, and I think all of us have the option to go for health menu as well. Festivals, India and festivals and food go hand in hand, right? And I think the team has done a wonderful job. We've got the Dashera menu right now on our flights. We're seeing tremendous amount of uptake and interest in the menu that we're offering for Dashera. We will do that for every festival. So it's a celebration of India, celebration of cultures, regions, etc., put together. So please do try when you fly the next time. You'll be really pleased and happy to pick up one of the menu that we have on board.
I'm looking forward to it, and especially since he's talked about how it's healthy and light. I think that's important, especially when you're flying. But talking about festive season and all the action, what about on the pricing front? And Praveen, that's the big question, right? In terms of how are you managing to do this? Everyone's always assumed that for a low-cost carrier, you either have to cut costs majorly. At a time like this, you've also got a lot of changes with regards to fare caps, a lot of competition in the market. What has the strategy been around pricing?
So objective is to be affordable and competitive.
Okay.
I think that's important as you have a pricing strategy in place. And that's exactly what we have been doing all along from the time we've started our operations. It's been benchmarked to competition. You've always remained competitive versus the industry in general. And as we expand our distribution and as we see our flights mature, we get better and better at that. Like when I highlighted the fact that we're at 30 today, in about 2 weeks, we go up to 44.
Okay.
So when you rapidly add flights on a frequent basis, you need to be watchful and mindful of how you are perceived in the market as well. Which is why I say we'll be competitive. Our objective is to position ourselves as affordable and provide the right connectivity within India. And 8 cities with 6 aircraft will provide exactly that.
So this is 8 cities, 6 aircrafts, including the additions that you're looking
Absolutely.
at currently.
As of 21st of October, that's correct.
And when you first launched, you talked about how it was the access from metros to the smaller towns that you were looking at building as something that was unique to you. Is that, again, going to continue to be your USP, or in time to come, would you look at, of course, being a full, somebody with a complete bouquet of routes, or would you like to maintain this particular USP?
So it's always important for any airline to establish a base. As we get our first few aircraft, our objective is to set that base. And that's what we do with the initial set of aircraft. And you will see that effective 21st, we get into Guwahati, we get into Agartala, which is the tier 2 cities. And you can establish that only after you've set up a base on your focus cities, which are the likes of Bombay, Ahmedabad, Bangalore, Cochin, Chennai, and now we are at Delhi, effective the 7th. That enables you now to create tier 2, tier 3 connectivity because you have formed your base. And with an aircraft coming every fortnight, it becomes that much more easier to complement the network in a way where we can drive traffic into tier 2 cities.
So there were some concerns or curiosity, especially at the time of RJ's passing, on really what kind of runway perhaps the initial funding had given. Are there any future plans for further capital infusion? Is that something that's going to be on the cards anytime soon, or what is the kind of horizon for that?
No plans at all for any kind of future funding. Where, as we've said before, we are eternally grateful to Mr. Jhunjhunwala. He's left us in a good position. As far as the airline is concerned, of course, it's not a good position. With the sadness that we all feel with his demise. But at this point, there's no plans for additional funding. We're well capitalized. We're not looking to raise any more money. Did that have an impact in terms of, perception, association with the brand, morally, or just in terms of, the enthusiasm around the brand story? Did that have an impact post his demise? I think when you have someone like Mr. Jhunjhunwala associated with the brand, you do get a lot of free publicity. And by the way, I'm going to focus on the business aspect of him. It should be taken for granted the kind of sadness that we and his family feel, obviously, with his demise. So we got a lot of attention just by being associated with Mr. Jhunjhunwala, but we all knew that attention for any business only lasts so long. In fact, our view was that attention, and this is, by the way, something that we talked freely with Mr. Jhunjhunwala, because he was telling us one day, do you all think that you need a brand ambassador? And my answer to him directly was absolutely not. I said, Rakesh, you are the brand ambassador. It's good enough. We don't need anybody. But in that conversation, we talked about how long that would last. And our thought was that it typically will last only up until your first flight. Right. So all the brand halo we got, we knew would stop or be curtailed the minute you put that first aircraft in the air, the minute the first passenger got on board. Because after that, it really is a story of how we take care of our customers. And so that's where we are today, and that's where we would have been today under different circumstances as well. It's now, the proof is now in the pudding, how we're taking care of our customers. And so far, it's been 60 days, and we're pleased with where we are. He was always very bullish, of course, on the India story, the domestic story, and therefore, of course, consumption and the number of people that would travel. Now, we're also seeing this in the way we're seeing rapid expansion in terms of the number of airports, the kind of, parking bays that are available, and so on and so forth. How has been the experience in that context, Praveen, in terms of the ease with which, you've been able to deal with the authorities, get some of those priority slots, perhaps for Akasa? What has that experience been like? Has it been easier than perhaps one would have anticipated? Has it been challenging?
The experience has been fabulous. I think right from the time we filed for the NOC till we got the AOC and we took off with the first flight, our experience with the ministry, with the DG has been fabulous. no questions asked. They've been so cooperative and so transparent with us into where we stand, how things are moving, etc., etc. Let's come to the parking slots, which is more the core question around this. But let's face it, it's a growing economy. Airports continue to grow. There are constrained airports today, but there are very many slots available despite airports being constrained. We are happy. When we wrote the script way back in September, October of 2020, I don't think we had Bombay in mind. But here we are with an aircraft parked in Bombay and more slots coming out of Bombay. So clearly, it's what we envisaged versus where we are today. We're extremely happy. And moving forward, we are extremely happy with the response we're getting from the airports. And the infrastructure is building. You look at Bombay, though it's constrained a little, you got Navi Mumbai coming up in about a couple of years. In Delhi, you got Jewar Airport coming up in about a couple of years. So the infrastructure is building. The passenger numbers are going to grow from 200 million to 400 million. That's the reality. Pre-COVID versus what we're going to see in the next 7 to 8 years. Airplanes are going to grow as a result. You're at 700 airplanes today in this country. You will see 1,500 airplanes in about 7 to 8 years. It has to happen because the growth engine is so strong. We're such a self-sustainable economy that you will see the infrastructure contributing to this whole aspect. And we are very happy that as an airline, we have probably come in at the right time. There is no baggage of COVID with us. We have entered at the right time, and we believe, and history has been witness to this. Every time the industry has seen a lull of 1 or 2 years, it just bounces back with a vengeance. So the next 2 to 3 years are going to be extremely strong for the industry. Infrastructure is going to be up and running by then. As a result, in exactly the way Mr. Jhunjhunwala was highlighting time and again, the next 10 years is going to be by far the best that India has witnessed as an economy, more so the airline industry. That's what you'll see.
It's exciting to hear. And that's where we leave it on the show tonight. Thanks so much for watching.
Scroll, scroll, scroll. Is that what you do all day? A study says that excessive use of social media can develop depression in young adults. The study was published in the Journal of Affective Disorders Reports. It says that young adults who use social media more are likely to develop depression within 6 months, and this is regardless of their personality type. Previous research has linked depression with many other factors, including social media. This study addresses the important research questions, finding strong and linear associations of depression across all personality traits. In 2018, the study took a sample of more than 1,000 young adults from America aging between 18 and 30. Depression was measured using the Patient Health Questionnaire. Social media was measured by asking participants how much daily time was spent using popular social media platforms, and personality was measured using the Big Five inventory. This assessed openness, conscientiousness, extroversion, agreeableness, and neuroticism. The authors suggest that social comparison can enhance negative feelings in one. This could explain how depression increases with prolonged use of social media. Another reason could be indulging in negative content. Finally, engaging more on social media reduces opportunities for in-person or social interactions. The study was published by Renee Merrill. She said findings from the study are important during a time of technology expansion and integration. Connecting to people virtually may increase the risk of miscommunication or misperception that leads to relationship difficulties and potential risk for developing mental health problems.